Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today for our weekly wrap-up. Graham, tell us a little bit about what's been going on in the market.
Yeah, thank you, Stacy, and thanks for our listeners jumping on the call. You know, kind of a mixed performance last week. I think the investors were weighing out inflation, geopolitical tensions, and that's probably putting it lightly. So we saw the S&P 500 gain about 0.5%. The Nasdaq lost about 0.2%. The Russell, interesting, fifth time in 6 weeks, it was down 1.5%. We did see 9 of 11 of the S&P sectors. They were positive, led by utilities and energy, up about 3.5% and 4.5%. Also, financials, who started the earnings kickoff last week, they came out with some really good earnings. We saw JP Morgan, Citigroup, Wells Fargo, all report some good earnings. On the other side of that, from a commodity standpoint, we saw oil really rally off of those geopolitical events overseas. That was up about 6%. At the same time, we saw a flight to the safety trade. So we saw gold prices spiking up about 5%. Also, probably helped out gold, maybe some other areas. We saw some easing, maybe in some U.S. Treasury yields, but still saw a big run in those long-term yields. That hasn't quite petered off that much. If we look at inflation, that was up. The CPI number was up about 0.4%. If we look year over year, that was about 3.7%. So putting that in perspective, think about mid of last year, we were about 9% on inflation. So we're about 3.7. Now that sounds like a pretty big drop, but that's not quite to where the Fed has said they want it, and that they want it around 2%. But we did see some consumer confidence pullback. So that pulled back to about 63 in early October. That was from a 68. That's as inflation kind of spiked up. The fear, maybe that some inflation number expectations might be a little bit higher than maybe originally thought. I think originally they were thinking about 3.2%. Now they're thinking, okay, maybe inflation might be around 3.8. If we jump overseas and think about internationally, let's think about growth or maybe the lack of. So we saw the International Monetary Fund cut the 2024 growth forecast for China and the Eurozone, mainly in China because of real estate and some property issues or crisis that they're having over there, as well as inflation and how it's surging. Even on top of that, for China, we still saw a gradual recovery, in domestic demand. If we look at the Bank of England, they're expressing concerns. We got high inflation, and high interest rates that's squeezing the households over there in terms of borrowing costs and stretching their currency for goods and services. We also saw continued output or a contraction or pressure on their construction side of their economy.
Okay. Well, Graham, how did changes in the U.S. Treasury yields influence the investor sentiment here at home?
Well, think about it. As you and I go to get a loan, or we look at our credit card statement, and we've seen these interest rates higher, right? I mean, we're almost on a 30-year mortgage at close to 8%. That might get you to rethink about purchasing the new home, or the size of the home, or buying a car, or different things. So it puts pressure on top of inflation already being high. Then you have high interest rates. It's just hitting the consumer from multiple angles. And I'm going to be straightforward. I don't think it's fully shown up in all the economic data, because we're still showing a rather strong economy with such high interest rates, knowing that the consumer is now eating away at all this extra savings they had through the pandemic.
Right. And how do you see that impacting the overall economic outlook as we move toward the end of the year?
Yeah. Well, I think we're going to probably see a slowing of the gross domestic product. I think that's a lot of what my peers are expecting out there. We may go into a light technical recession. I don't know at this particular time. We feel it's going to be a deep protracted. We just don't see that because we have unemployment still really good. I mean, no one wants to be unemployed, but what, 3.7, 3.8%. But on the flip side of that, we saw wages coming down. Now that's almost like almost a perfect storm here for the Federal Reserve to have wages coming down, but employment or unemployment not jumping up. We'll just have to see how that continues to float going forward.
All right. Well, thank you so much for
You
that.
got it.
Thank you to our viewers for joining us today, and we'll look forward to seeing you again next week on the weekly wrap up. Until then, have a great week.